Welcome to this explainer. Today, we're going to jump right into a process that absolutely every organization relies on, but honestly, very few have truly mastered. I mean, just think about the pure, absolute dread of a surprise compliance audit when your master data is missing, incomplete, or sitting in, 5 different spreadsheets. We've all felt that pain. To solve that, we're looking at how to manage the complete end-to-end lifecycle of both company-owned and leased assets right inside AssetPro. From the exact moment a piece of equipment enters your organization to the day it's retired or returned, we're going to explore how mastering this workflow unlocks total operational visibility and basically turns those auditing nightmares into a walk in the park.
Okay, let's dive into this by asking a really critical question, one that haunts a lot of finance and operational teams during sudden audits. Do you know exactly what you own versus what you're just borrowing? It sounds simple, right? But when you have hundreds of vehicles, laptops, and pieces of heavy machinery scattered across all these different locations, the line between an owned capital asset and a leased liability gets blurry incredibly fast. And if you get it wrong, you risk inflating your balance sheet, accidentally disposing of equipment you don't even own, or completely failing major compliance checks.
To avoid that exact auditing nightmare, AssetPro acts as your single source of truth. So what does that actually mean in practice? Well, it means building an incredibly accurate, up-to-date master data inventory of absolutely everything in your custody. This methodology goes way beyond just financial reporting. It acts as the ultimate master data record that seamlessly drives your physical transfers, your procurement tracking, and your floor audits. It completely eliminates duplicate records, it slashes the time your team spends frantically searching for misplaced equipment, and it ensures that all your maintenance and financial reporting is based on reality, not guesswork.
So here is our roadmap for today. We'll start with one source of truth, then look at purchasing company-owned assets. Next is managing external leased assets, followed by classification, tracking, and locations. And finally, we'll wrap up with compliance, returns, and value.
Let's kick things off with Section 1, One Source of Truth, establishing your asset foundation. Let's start right at the foundation of the platform. Because before we can track anything, we have to establish exactly how the system distinguishes the things we buy from the things we borrow, all while keeping everything in one unified view. The core difference in the entire system literally all boils down to a single, incredibly important data point, and that's the owner name field. Whether an asset is leased or owned, its physical classification remains completely identical. But the ownership distinction, that happens right here. For company-owned assets, the owner name is your company. For leased assets, the owner name is the leasing vendor. It's a really simple toggle, but it fundamentally changes how the software treats the equipment both financially and operationally.
Moving on to Section 2, Purchasing Company-Owned Assets, adding new capital assets to inventory.
Let's look at our first track and see how this builds out when a newly purchased, company-owned capital asset is onboarded into your inventory. This is the exact process you're going to use for ground support equipment, vehicles, IT assets, machinery, the whole shebang. To get a newly purchased item into the system properly, you absolutely must use the purchase invoice voucher workflow. And the crucial point is right at step 1. You have to select asset instead of spare. If you accidentally select spare, the system treats it as consumable inventory and it won't generate those individual asset tracking records. Once you're in, you'll enter the invoice details, attach your documents like the vendor invoice, and enter the asset's financial rate. A quick pro tip for you here. Always enter the rate net of GST so that your asset value aligns perfectly with your accounting records. Oh, and attaching that vendor invoice directly in step 2, absolutely vital. It creates an unbreakable, instantaneous digital paper trail for future auditors so nobody has to go digging through physical filing cabinets later. Now, alongside the invoice date, you'll also need to accurately record the manual GRN date, which stands for Manual Goods Received Note Date. So why does this matter? Well, think about a scenario where a vendor invoice is officially dated June 10th, but the actual equipment physically arrived in your yard on June 5th. The manual GRN date ensures AssetPro tracks the true physical receipt of the equipment for historical accuracy, which is completely separate from the billing timelines. This way, your accounting paper trail and your operational reality are both preserved flawlessly. And selecting the correct equipment subtype automatically goes to work for you. Let's say you select baggage tractor as your subtype. AssetPro instantly generates a unique primary asset code for it, like BT001. If you buy a ground power unit, it gets GPU001. And here is where the magic really happens.
The system generates these unique codes based on the quantity you entered on the invoice. If you buy 10 identical baggage carts on a single invoice, just entering a quantity of 10 creates 10 individual, uniquely coded asset records instantly. This individual serialization is exactly what enables granular tracking, precise location updates, and accurate lifecycle management later down the line. You aren't just tracking a batch of items anymore, you're managing 10 distinct life cycles.
Next up, Section 3, Managing External Leased Assets, Tracking Without Capitalizing. Let's switch tracks over to external vendors. Equipment leased from external vendors requires completely different handling. Remember, leased equipment is in your possession, but it is not your property. We have to track it meticulously without accidentally capitalizing it on your balance sheet. To achieve that, all leased assets are recorded using a purchase voucher at a quantity of 1 and a financial value of exactly 0.
You might be wondering, why 0? Well, simply because you don't own it. If you don't own it, it shouldn't be capitalized, and depreciation rules just don't apply. By combining that 0 value with an external owner name, say Cool Systems Leasing Limited, the auditor instantly recognizes the record as a liability, not an asset purchase. It's a remarkably clever accounting safeguard. You still get to track the item operationally, you know exactly where it is, and you can schedule daily maintenance for it. But financially, your books remain perfectly accurate and wonderfully uninflated.
Moving into Section 4, Classification, Tracking, and Locations. Managing assets in the real world.
Once these assets, whether owned or leased, are officially registered in AssetPro, we need to know exactly how to classify, identify, and track them out there in the real world. To keep things standardized, every single asset uses this exact same 5-level taxonomy classification. It flows down from category to type, subtype, make, and model. For example, whether you bought it or rented it, an AC unit will be classified as electrical appliances, air conditioner, split AC, Daikin, FTKF50. Having this clean, standardized master data unlocks some really incredible reporting capabilities. Because everything follows the exact same hierarchy, leadership can run instant global reports on all Daikin split ACs across the entire company, regardless of who legally owns them. That's huge for highly precise operational decision-making.
But what about the physical tags on the equipment itself? To bridge the gap between the software and the physical world, AssetPro provides 2 specific alias fields. The alt name is for what's written physically on the equipment, like a manufacturer's serial number or a vehicle license plate, say DL01AB1234. The owner code, on the other hand, is for what the asset is called in your contracts, like a lessor's contract ID or maybe your own internal billing reference. This is an absolute game changer for auditing. Just imagine a scenario where an auditor is physically standing on the warehouse floor, pointing at a baggage tractor's license plate. Because of that alt name alias, a worker can instantly search the system using that exact license plate and pull up the digital master record right on the spot to prove compliance. It bridges the physical and digital seamlessly.
Naturally, things change over time, right? During a lease or the lifespan of an owned asset, you can and definitely should update locations as equipment moves from one office or yard to another. In fact, seamlessly transferring an asset in the system when it physically moves to a new site is critical. It maintains utilization visibility and actively prevents equipment hoarding by one department while another is short on tools. You can also log maintenance history and change the status from working to repair. But, and this is a big but, you must never ever change the owner name or the system-generated asset code. The asset code is immutable, and that owner name is the sole critical marker telling everyone that this specific item belongs to a third party.
And finally, Section 5, Compliance, Returns, and Value. Completing the life cycle and strategic benefits. Let's look at the end of the journey. How do assets safely leave the system, and what is the real overarching business value of mastering this strict lifecycle process? Let's take an ending lease as an example. When it's time to give equipment back to the vendor, you simply process a sales voucher, select the item by its unique asset code, and set the value to 0. This logs the return without triggering any sort of financial transaction. It safely removes the item from your active, current inventory, while perfectly preserving its historical data. So if an auditor comes knocking a year later asking where that leased AC unit went, the record proves exactly when and how it was returned.
By strictly following the single source of truth methodology across both your owned and leased assets, you unlock some incredible business value. You are literally turning administrative data entry into strategic operational power. You get guaranteed audit compliance. You gain total operational visibility over where your equipment actually is.
That immediately improves equipment utilization because you stop renting things you already have sitting idle somewhere else. And ultimately, this level of master data accuracy leads to highly accurate financial and leasing decision-making across the board.
So I want to leave you with this provocative thought to consider for your own operations. If an audit team walked through your doors right this second, could your data instantly and flawlessly prove exactly what you own versus what you were just borrowing? Because with AssetPro properly utilized and managed through its entire lifecycle, the answer to that question is always going to be a confident yes. Thank you so much for joining me on this explainer, and I'll catch you next time.